Hey everybody! Welcome back to the channel. Today, we've got a monster of a topic to unpack. And trust me, it's one you're going to want to stick around for, especially if you're a retiree or know someone who is. The Social Security Administration is making waves right now, dropping retroactive payments left and right under the shiny new Social Security Fairness Act. And millions of folks are seeing their benefits go up. Sometimes by a little, sometimes by a whole lot, like hundreds or even over $1,000 a month. Picture this. You're sipping your morning coffee, checking your bank account, and boom, there's extra cash staring back at you. It's the kind of news that makes you want to do a little happy dance, right? But hold off on popping the champagne just yet, because there's a sneaky little twist you need to know about. Taxes. Yep, those bigger benefits could come with some tax implications that might trip you up if you're not paying attention. So, grab a snack, get comfy, and let's dive deep into what this all means, how the Social Security Fairness Act works, who's getting the boost, what it could do to your tax bill, and how you can stay ahead of the game. And hey, if you love getting the full scoop on stuff like this, don't forget to smash that subscribe button so we can keep this party going. All right, here we go. Let's start with the basics of this new law, because it's a big deal. The Social Security Fairness Act was signed into law on January 5, 2025, and it's basically a long overdue fix for a problem that's been bugging certain retirees for decades. See, there were these two provisions called the Windfall Elimination Provision, WEP for short, and the Government Pension Offset, or GPO, that were cutting into Social Security benefits for a ton of people, mostly folks who worked in public sector jobs like teachers, firefighters, police officers, postal workers, and federal employees under the old civil service retirement system. If you're not familiar, here's the quick rundown. The WEP would shrink your Social Security benefits if you had a pension from a job where you didn't pay Social Security taxes, even if you earned benefits from other jobs where you did pay in. The GPO was similar. It slashed spousal or survivor benefits for people with those same pensions. It's been a thorn in the side of public servants forever. And I mean, think about it. You spend your career teaching kids, or putting out fires, and then retirement rolls around and you're told, sorry, you don't get the full Social Security you earned. Frustrating, right? Well, the Social Security Fairness Act says, no more of that nonsense. It wipes out both the WEP and GPO, meaning nearly 3.2 million retirees, by some estimates, are finally getting their full benefits. No cuts, no funny business. Now, what does that look like in real money? For some, it's a modest bump, maybe an extra $50 or $100 a month. But for others, it's life-changing, like $500, $800, or even over $1,000 more every single month. Imagine you're a retired firefighter who's been getting, say, $1,200 a month from Social Security. But because of WEP, you were missing out on $600 you should have had. Now, with this law, your check jumps to $1,800, and you're getting a retroactive payment to cover what you were owed before. That's huge! And speaking of those retroactive payments, the Social Security Administration is already on it. According to their official word, most people will receive their one-time retroactive payment by the end of March, and it'll land right in the bank account they've got on file with Social Security. So, if you're eligible, you might log into your banking app one day soon and see a nice little, or not so little, surprise waiting for you. Kiplinger's been reporting on this too, saying the SSA is moving fast to get these changes rolled out, and folks are already starting to feel the impact. It's exciting stuff, no doubt about it. But here's where we need to pump the brakes and get real for a minute. As awesome as this financial boost is, it's not all smooth sailing. Those increased benefits, both the monthly uptick and the retroactive lump sums, could shake up your tax situation in ways you might not expect. I know. Taxes aren't exactly the fun part of the conversation, but stick with me, because this is where it gets critical. The thing is, Social Security benefits aren't always tax-free. Depending on your overall income, a big chunk of them, up to 85%, can be subject to federal taxes, and with the Social Security Fairness Act pumping more money into your hands, a lot of retirees might see their tax bills creep up. The good news? Since these payments are hitting in 2025, they won't mess with the tax return you're filing right now for 2024. That gives you a little runway to plan ahead for your 2025 taxes, which you'll tackle in early 2026. Your SSA 1099 form for 2025 will show all these new payments, so you'll have the numbers in black and white. But trust me, the time to start thinking about this is now, not next year when you're scrambling. Let's break down how this tax stuff works, because it's a little tricky, but super important. The IRS looks at something called your combined income, or provisional income, to figure out how much of your Social Security gets taxed. That's your adjusted gross income. Think wages, investment income, that kind of stuff. Plus, any tax-exempt interest, like from municipal bonds, plus half of your Social Security benefits. With me so far? Okay, now here's where the Social Security Fairness Act comes in. Say your monthly benefit goes up by $800. That's an extra $9,600 a year. Half of that, $4,800, gets added to your combined income. Plus, if you get a $10,000 retroactive payment, that bumps your income even more for 2025. Depending on where you were before, that could push you over some key thresholds. If you're single and your combined income is under $25,000, or under $32,000 if you're filing jointly with a spouse, your Social Security benefits are totally tax-free. Sweet deal, right? But if your combined income hits between $25,000 and $34,000 as a single filer, or $32,000 and $44,000 for joint filers, up to 50% of your benefits can be taxed. And if you're above $34,000 single, or $44,000 joint, up to 85% of those benefits could be taxable. That's a massive shift for someone who was just under the line before. Let's put some real-world spin on this. Imagine you're a retired cop, single, living off a modest pension and Social Security. Before the Fairness Act, your combined income was, say, $23,000. Below that $25,000 mark, so no taxes on your benefits. Now, your Social Security jumps by $700 a month, that's $8,400 a year, and you get a $12,000 retroactive payment. Half your new Social Security benefits, plus that lump sum rockets your combined income to something like $39,000. Boom! You're over $34,000, and now 85% of your benefits are taxable. That could mean hundreds or even thousands more owed to the IRS come tax time. And that's just federal taxes. States handle Social Security differently. Some, like Colorado or West Virginia, tax benefits partially in 2025, while others like Florida and Texas don't touch them. If you're in a taxing state, this could be a double whammy. Wild, huh? But wait, there's more to this tax roller coaster. That retroactive payment isn't just a little blip. It's a big income spike in the year you get it, and that could shove you into a higher federal tax bracket. For 2025, brackets adjust for inflation, but let's say you're hovering near the top of the 12% bracket, around $47,000 for a single filer. A $12,000 lump sum could kick you into the 22% bracket, meaning you're paying a higher rate on part of your income. And it's not just about brackets. Higher income can shrink or wipe out deductions and credits you rely on, like the credit for the elderly or disabled, or even medical expense deductions if you itemize. It's like the IRS is playing Jenga with your finances. One move, and the whole tower shifts. Oh, and here's a bonus headache: Medicare premiums. If you're on Medicare, your Part B and Part D premiums could climb thanks to IRMA, Income-Related Monthly Adjustment Amount. It's based on your income from 2 years back, so a 2025 spike could mean pricier premiums in 2027. A $10,000 or $20,000 lump sum? That could easily trigger IRMA surcharges, adding $50, $100, or more to your monthly bill. Now, I don't want you to feel overwhelmed. This is still a win, just one that needs some strategy. Since these changes are rolling out in 2025, you've got time to get your ducks in a row. Maybe you sit down with a tax pro who can crunch the numbers. Should you tweak your withholdings from other income, like a pension or IRA withdrawals? Or maybe make quarterly estimated tax payments to spread out the hit? You could even look at timing, like if you were planning to sell some investments, maybe push that to 2026 to keep 2025 income lower. And don't sleep on state rules. Check if your state taxes benefits and plan accordingly. The SSA is doing its job, getting these payments out fast, but it's on you to make sure this windfall doesn't turn into a tax trap. So, wrapping this up, phew, we covered a lot, didn't we? The Social Security Fairness Act is a massive victory for retirees who've been shortchanged for too long. It's real money, real relief, and a real chance to enjoy retirement more. But with those bigger checks and lump sums come some tax hurdles: higher taxable benefits, bracket shifts, Medicare surprises, state taxes, all stuff you can handle with a little foresight. Don't let it catch you off guard. Get ahead of it, maybe chat with a tax expert, and keep that extra cash working for you, not the IRS. All right, folks, that's the deep dive on this. Hope it cleared things up. If you loved this breakdown or just want more money tips like this, please hit that subscribe button right now. It keeps us going, and I'd love to have you back for more. Drop a comment. Tell me if you're getting these benefits, or if you've got tax tricks up your sleeve.